Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how markets go in cycles and look at a few days of trading on the 3-minute Nifty, which is the main index out there in India. This is a good example to highlight what we call the cyclical nature of trading, where markets go in cycles, where there's clear periods, quiet periods, where there's profits and there's losses. But before we get on to all that, we have to look at our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. There were no trades taken, they're just shown for illustration and trading purposes only. There's risk of loss in trading and investing. I'll say that again in another way. All professional traders know and understand and accept that losses can and will and do happen. And in today's video we will be looking at losing trades. I think more software vendors ought to show more losing trades in their videos because losses can and will and do happen. So we'll be looking at these today as well. Right, so without further ado, let's go over to a chart, and this is MTPredictor version 8 using data with global feeds data over there in India, and I want to have a look at the Nifty on a 3-minute chart over a few days. So we're not sort of cherry picking good examples, we're looking over the last 2 or 3 days to get a bit like a longer term perspective of how this has basically been unfolding. So this is today, which is Monday the 15th of May, and as you can see, basically the market's chopped sideways. If I zoom in a bit, our MTP trend has indicated that the trend is up and blue, and quite frankly the Nifty's gone absolutely nowhere. You can see it's basically gapped up and basically just drifted sideways, and this is what markets do. And it's important to understand that there will be times when you just can't trade a market because there's no clear and clean pattern. This is why we describe this as what we call the cyclical nature of trading, and that only about half the time, in other words 50% of the time, will you get markets in a clear and clean pattern that you can even start to do any analysis on. So this is the one thing I want to stress right away, is that literally when you're trading, don't be at all surprised to have days like this where quite frankly the market is in an untradable position and it's just chopping sideways and going nowhere. The only potential trade setup was a holy grail trade setup on the short side, but it was against our blue MTP trend, so it would have been avoided. So quite frankly today was a write-off because the market went nowhere, and that was good because you shouldn't have been trading that market, that time frame today anyway. So basically MTPredictor kept you out of a sideways choppy market when it's horrible. Let's go back to the previous day. This was Friday the 11th, no, this is Friday the 12th of May, and you can see here we had some trade setups. Let's start a bit earlier in the day where we had a TS2 sell on a red MTP trend. Largely trend was down, so we right mouse click on that red sell bar, do analysis, and that would have got you into a short trade. Let's change the account to rupees so we can see our position sizing in rupees. You can set this up for different currencies, so even if you're in the US, you can have your position sizing in dollars, even though the Nifty is denominated in rupees. You can set up this for different currencies as you wish. So let's go back to rupees. So here we are, the first trade of the day. You would have been taken in short, and guess what? You would have been stopped out. So this is what I said in the risk disclaimer right at the start, is there will be losing trades. Any professional trader knows and understands that losses can and will and do happen. It's important to understand that. But our correct position sizing means that we vary the number of lots, contracts or shares to keep our risk constant over each trade. In this case it's risking less than 2% of a sample 100,000 rupee account. So in other words, this is what we call a 1 risk unit loss. In other words, a 1R loss. So I'll just note that down. So we'll have, so it started the day off with minus 1R. We then got another trade set up here. Let's clear everything off. Again, this was on a red MTP trend, i.e. down. So this would be a good one to take. We right mouse click, place the analysis on. Taking you in short, the market starts to decline. We've had a potential buy set up here. You'd have done nothing because this was on a red MTP trend. Market was still deemed to be going down. Let's zoom in a bit. There was another potential trade set up here. You can see deemed by our our history triangle here. This was on a black MTP trend. So when you're in a current trade that looks to be going well, and your MTP trend is black, in other words, at an area where a reversal is potential, there's no reason to swap from your current good trade. So in other words, when the market got to this level, there's no reason to want to then swap a profitable and good short trade for a potential long trade, because the MTP trend was black. In other words, it was only at an area of where a potential reversal was potentially unfolding. In other words, potential support. So in other words, you should have stayed short here. There was a TS4 sell here. You were already short anyway, so you would have either avoided that, or you could have used that to add or pyramid to your current existing profitable short position. The market then came down to the first target here. When it hit this, our MTP trend indicator was what we call weak, in other words, less than our grey strength band here. Therefore, you come out at the target. That would have banked a plus 6.7R profit. And this is why we use correct position sizing, because can you see earlier we had a losing trade? Remember, losses can and will and do unfold, but that loss was 1R or 1 risk unit, but this profit was 6.7 risk units. In other words, 6.7 or almost 7, if I can say that for easy maths, almost 7 times greater. So in other words, this one profit would basically make up for 7 other, or almost 7 other losing trades. So that was a very good place to take profits, which was pretty much the low of the day. If I scroll out, you can see a great place to bank profits. If I clear off here, you can see the MTP trend had gone blue. Therefore, this VS or volume spike setup was a good one to take. So you'd have been coming out of a short trade and then looking to go for another long trade, and that had a nice run up into just before the close for plus 2.6R. So let's just add that all up. So it's so let's do it this way: 6.7 plus 2.6, and then we must remember the minus 1R loss earlier on, and that would have been plus 8.3R overall. And that's why we like position sizing, correct position sizing, because when the profits come through, they're large, or that's the aim of the game, is we have large profits, but when the losses come through, which they will and they do, they're kept small. So this was a very good day. So May the 12th was a very, very good day on the Nifty, where we had losing trade, a very big profitable trade here on this TS3 sell. Plus 6.7R is a very nice big profit, so a good day. Let's scroll back and have a look at the day before. The market was starting to sort of crawl up here, but there weren't really any clear, clean patterns. These sell setups here are against the blue MTP trend, so would have been avoided. We come along here, there's a history triangle here. History triangles show you that there was a trade setup at the time, a potential trade setup at the time. So this allows you to right mouse click over the blue buy bar and then place your analysis on to see whether that trade was a good one to take. Let's say you would have taken that one, that would have been a losing trade. It would have been valid because it was MTP trend blue, but would have been a losing trade. Remember, losses can and will and do happen. The market then came back down. There was another trade set up here. Again, this one would have been a losing trade. So the day before, i.e. May the 11th, on the 3-minute Nifty, you'd have had some potential trades that you'd have avoided. Then you'd have had 2 losing trades. So that whole day would have been a losing day. But the whole day would have only been minus 2R. So minus 2R. Then you come into the next day. Again, you'd have started off with a loss. But then you'd have had a nice profitable trade. And overall, as we've seen, it would have been plus 8R, and then today would have been absolutely nothing. In other words, nothing going on today. So this is why I've done the video today over a slightly longer period. In other words, looking at 2 or 3 days back to back, because it shows the cyclical nature of trading absolutely perfectly. In other words, half the time, just like today, the pattern is just not clear. It's chopping sideways. It's a horrible day. You shouldn't be trading at all. So there's periods when you have to sit aside and do absolutely nothing. If I go back to a couple of days ago, there are periods when you'll have losing days, you'll have losses come through, but those losses will be kept small. And then there are periods when you have good days, where you do have losses as well as profits, but you have good days where you have some good profitable trades come through, and that is what makes you money in the end. In other words, you have profits where the profits are much larger than the losses. So that I wanted to do today to show you the cyclical nature of trading. So just to remind you that you have quiet days, you'll have losing days. Yes, you will have losses. It's important for every software vendor to stress that losses can and will and do unfold. But the trick is then waiting until you get some nice, clear, clean patterns, and when you have some good trade setups, and within that, keep the losses small and then have trades where the profits are much larger than the losses, and that's what MTPredictor is designed to do. So I hope you've enjoyed having a look at this over a slightly longer period, where we look at 2 or 3 days back to back, and this was on a 3-minute chart of the Nifty, which is the main Indian index over there in India, to show you some good trade setups that have been unfolding there.